But did you know that you could open a US bank account with an Indian passport without stepping out of India, well within India itself? And opening a US bank account, what does it have to do anything with the recurrent wire transfer charges, which are the single most highest recurrent charge that impedes an Indian investor from investing into the US stock market? Does opening a US bank account really eliminate that?
Just as we saw in the earlier video, the overhead components involved in investing in the US markets can be broken into three buckets. Bucket 1 is a foreign exchange spread where banks charge around 0.5% of the amount transferred. Bucket 2 is a flat wire transfer charges that applies to every transaction, both in the onward leg and the return leg. Bucket 3 is the brokerage charge levied by the US discount broker. Now, to put this in perspective, for a $1,000 round trip, the total overhead cost can add up to nearly 7%. If we look at the cost on a pie chart, we notice that depending on the funds invested, each bucket, one bucket or the other, will dominate the overall overhead. The bucket 3 can be generally said that it is small and can be ignored for all practical purposes. So, as we discussed in the earlier video titled India to US broker transfers, really free? Recognizing which bucket eats up most of your cost is the first step to minimizing your transfer expenses. Here's the bucket style visualization. The red bucket, which represents the FX spread, is around 3.5%. The purple bucket, which represents the wire transfer, is about 3%. And the dark blue bucket, which is the US brokerage, which we think we can conveniently ignore, is 0.01%. So in this $1,000 experiment of round tripping, we notice that the real big buckets that we need to address are the red bucket and the purple bucket. The red bucket, the FX spread, is the trickiest one to tackle. This is the charge that your Indian bank adds when converting rupees to dollars before sending them to the US broker's pool account. Now here's the catch. Even though services like Western Union, Wise or other third-party money transfer apps are present, giving us better conversion rates, US discount brokers do not accept third-party transfers. They only accept funds that come directly from your own bank account. So, as an investor in India, you don't really have a way to bypass this red bucket entirely. Or is it? The purple bucket represents flat wire transfer charges. This fee is unavoidable when you try to send money directly from your Indian bank to your US discount broker's pool account. And of course, vice versa. So the question is there a way to move money? The answer lies in clubbing both the problems together. That is interesting, isn't it? Usually compound problems will make the problem bigger. But in this scenario, you will notice that it actually simplifies things. Instead of wiring money straight to the broker, let us open a US bank account. Once you have that, you have multiple choices for funding. You will still use your Indian bank, but send larger, less frequent transfers to cut the wire fee burden. Or if you're unhappy with your bank's FX spread, you can move funds more frequently in quantities that you're comfortable with using a third-party fund mover like Wise or Western Union and get better conversion rates. Because this time you're not wiring it to a broker, you are wiring it to your own US bank account, which most services allow. And here's the key advantage. Once the money is in your US bank, moving it to a US discount broker is usually free. Brokers and banks in the US connect via ACH transfers, which don't carry charges the way international wires do. So by setting up a US bank account, you effectively neutralize both the red and the purple buckets in one shot. ACH is a network that links all US banks and all US stockbrokers for domestic money transfers. It works very similar to NEFT, usually free or extremely low cost, but can take 1 or at the maximum 2 working days to settle. Now the next question is, how do we open a US bank account while living in India without a US visa and of course having the Indian passport? The answer lies in opening certain premium bank accounts with international banks. Those banks would typically be based out of UK or US. one can request that they open a US bank account for you, and we can tell them that we do not have a US visa. Now, here's the process. The premium banks will typically expect the investor to either have an ongoing relationship, like keeping your Indian salary account with them, or some level of investments in their products and services. But once that door is open, a whole set of opportunities open up for the Indian investor to the US. For example, in case there is a sudden black swan event and there's a sudden crash in the US markets, and you want to use the opportunity to invest in the US, with a linked US bank account, the transfer to the US bank can happen instantaneously. And from the US bank account to the brokerage account, it can happen within 24 hours. So that way, the movement of funds become seamless and very swift. This is actually free and takes less than 24 hours. In other words, by setting up a US bank account through the right premium banking relationship, you cut down both cost and time and give yourself agility to act when opportunities strike.
Friends, we have found a way to strategically reduce the overhead cost involved in investing from India to the US by opening a US based bank account. Now, here is the clincher. We have a US based bank account. We don't even have a US visa. We have an Indian passport. We don't have any plans of stepping into the US in the line of sight. But that being said, can we be really sure if we can park our money in a US bank account, especially from the fact that the US bank account is not regulated by the Reserve Bank of India. It is being regulated by the Federal Reserve. We are not even US citizens. So how safe is it? We shall discuss this topic in our next discussion.